2024 has been a great year for stock market investors. The S&P 500 index, it wouldn't surprise me if it's up over 30% by the time 2024 comes to a close. Other indices like the QQQ are likely to be up even more than that. So, what about 2025? Will it deliver a similar year? That remains to be seen. But I've got one stock here that's down 71% off its high that I think is ridiculously undervalued. Still, even after this bull run in 2024, there are still stocks in the market, if you spend enough time looking, that are undervalued. So I'm going to share with you why I think PayPal, down 71%, is an excellent undervalued stock to buy for 2025. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. PayPal had a really bad year in 2021 and 2022. Well, those are two bad years. That's why the stock is still down 71% off its high. Even though it recovered nicely in 2024, it started off the year as one of my top recommended stocks to buy. And I told investors that it would be a good time to take profits on the stock in terms of just removing it off my top stock to buy list. I still have it rated as a buy. As you see in this video, I'm recommending it again as a buy. But I don't have it on my list of top stocks to buy because it has run up so nicely here in 2024. I wouldn't be surprised, however, if at some point in 2025, I upgrade the stock again if it continues with its excellent performance. Speaking of excellent performance, looking at the trailing 12-month revenue for PayPal over the last decade gives me confidence that the company has established itself with merchants and consumers alike. That two-sided equation is what really helps PayPal stock investors. It's because it's a positive virtuous cycle. The more people that sign up for a PayPal account encourages more merchants to accept PayPal as a payment method, which makes it more attractive for more people to sign up for a PayPal account. And on the virtuous cycle can go 10 times higher than where it is today. As of this recording, PayPal has a little over 400 million active accounts. Now, if you compare that with a company like Visa, there are over 4 billion Visa cards in people's wallets. So you could see that it can grow roughly 10x from this point. Well, maybe not 10x because Visa cards, some people have multiple Visa cards, and so you might not be able to reach that level, but you get my point. It can grow significantly higher than where it is today, especially if it continues attracting merchants. Merchants are the one that really unlocks the value for people signing up for PayPal. It just makes it so much more convenient to use your PayPal account to pay for transactions online instead of taking out your credit card and typing in the information on every new website you visit. On top of that, it's more secure to use PayPal instead of putting in your credit card information on multiple new business websites as you go shopping online. Another reason why I like PayPal stock right now is because it has turned the tide from cash flow from operations declines. You can see here the rate of CFO to sales was falling all the way until late 2023 when it turned things around here. It's up to 24.38% now. There was a leadership change at the top of PayPal. New CEO came in mid to late 2023, and early signs indicate the CEO is doing well. The strategies the new CEO is implementing are working well, and that's creating a nice burst in cash flow from operations to sales. The new CEO also turned around the declines in monthly active users. They're now growing millions of monthly active users every quarter, whereas previously in the year or year and a half before the incoming CEO, they had been experiencing declines. Yet another reason why PayPal is one stock that could make a good investment in 2025. There's more. The return on invested capital is also improving after declines. It's now up to 14.5%. I wouldn't be surprised if this number approaches closer to the higher double digits, like 17, 18, 19% over the next several years as the new strategies take hold from the incoming CEO. And then when you look at valuation, that's what really has me attracted to PayPal stock. It's trading at a forward price to earnings of just 18.32, which is less than the average stock in the S&P 500. And when you consider the company's growth opportunities, especially as people will continue spending more money online compared to shopping in person. And people shopping online favors PayPal because it has a larger market share on online transactions, of course, than it does on in-person transactions, where it has a relatively small market share in those transactions. It just doesn't add that much customer value for in-person transaction versus online transactions. Compared to a credit card payment, it's a lot more convenient online versus in person. So that was one way for looking at valuation, is looking at the forward price to earnings ratio. Another way I look at valuation is by doing the discounted cash flow model. And for PayPal, I did this discounted cash flow model. You may have seen the video. I have a full video going through this step by step. I'll link to it at the end of this one. Basically, my conclusion after doing this whole analysis was that the intrinsic value per share, according to my estimates, remember my estimates, they're estimates, that's all they are, is that it should be worth $123 per share. Well, the current market price is only $89 per share. So according to this estimate, PayPal stock is undervalued by roughly $33 per share, or roughly 30%. That's a pretty big undervaluation using the discounted cash flow valuation. I don't find that kind of undervaluation very often. And when I do, I bring it to your attention by recommending the stock as an excellent stock to buy, as I'm doing in this video here. So in conclusion, PayPal stock is down over 71% off its high. Even though it had a good year in 2024, it still hasn't recovered from the losses in 2021 and 2022. The business is in good shape. New leadership looks good, right? It's still early days. It's less than a year, but so far so good. I like what I'm seeing from new leadership in the early stages. The company's growth prospects remain intact. Now, competition is tough. And that's one of the primary reasons the valuation is as cheap as it is. It's because competition in this industry is tough. But I think the risk versus reward significantly favors long-term investors here, and I think PayPal is one of the better stocks you can buy for 2025. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.